let's talk about the rate of return or target pricing. Now, with the rate of return or target pricing, the supplier bases the profit on desired return on investment. Look, think of it this way. If somebody says, if you have a business idea and someone says, here's $100, 100,000, whatever it is, $100,000, I need 20% return on that. And again, let's say in that business you're selling a pen. So then the question becomes, how many of these pens are you supposed to sell so that you can generate enough to give that person 20% on their 100,000 that they gave you, assuming that you're also going to make something out of that. So the price is supposed to be such that it can cover that amount that you're supposed to make, and then the extra return that is needed. These strategies, the strategy involves figuring out a price that will cover all costs, that is fixed cost plus variable cost, and still get you the return you desire. But then the question becomes, since this is learning by doing, how does that work practically? And in order to understand that, let's make an assumption, okay? Let's imagine a company that creates custom-made furniture and it desires a 20% return on its investment. Now, the first thing we need to understand is what exactly is the cost of capital employed? How much are they putting in? Because that becomes the investment. And from that, we need to get 20% of, whatever. In this case, we have furniture making equipment, which is $100,000. Inventory, like wood, tools, supplies, $20,000. Factory building, that is $80,000. So the total capital invested in this case is $200,000. Now, we know how much we've invested, but what cost are we incurring to do that thing, to make those things? So let's figure that one out. So it's like I gave you $100,000. Now you just can't say, yeah, I'll give you 20% back. You need to understand from this 100,000, okay, how much am I in, what is the cost of doing whatever I'm doing, first of all. So the total cost, or the cost in this case, we're talking about fixed cost per year. So that will be rent, equipment, maintenance, insurance, that is 50,000 per year. Salaries for employees, again, 100,000 per year. So that is their total fixed cost, which is 150,000. Then you have variable cost per furniture. So wood, $100 per item, labor, 50, other materials, 30 per item. So the total variable cost is 180. But then that is per whatever it is that they're producing. Then there is a question of how many of these things are they producing so that they can find the total variable cost for everything. So in this case, the company produces and sells 2,000 pieces of custom furniture per year. And that will make our total variable cost to be 180. Remember, that was per item, times the 2,000. So that gives us 360,000, which means if we add that to our total fixed cost, which was 150,000 per year, then our total cost for the year is $510,000. Remember, the company desires a 20% rate of return on $2,000 capital invested. $200,000 of the capital invested. So we take that 200,000, multiply that by 20%, and we get 40. So that is what they want, $40,000. So at this point, it's important for you to understand something. And about something like revenue, simply talking about how, when you're in business, profit is not the same as revenue. So these people desire $40,000. That is not revenue. That is what they want. Okay, that's an equivalent of their profit. Like if you're selling this pen for 10 and you sell 40 of them. So now it's 40 times 10. That becomes, the 400 becomes your revenue. But then you still have to figure out things like cost of goods sold, direct expenses, blah, 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 all the way to your profit. So when somebody says, I want 20% on whatever it is that I've given you, that 20%, they want that 20%. After you've taken care of all your costs, I just want to make 20%. Okay? So anyway, so in this case, we figure out that the 20% is going to be $40,000. So let's see, what is our selling price? Because we need to understand our selling price, because revenue will be the selling price times the number of units that we sell. So to understand that, so the required revenue is equals to total cost, okay? Total cost of making that thing plus the desired return. That's the revenue, right? So in this case, $510,000 plus 40, we have 550,000. So if we get that, if we get the 550,000, then that is enough money to guarantee us our 20% return. But then from this 550,000, how much are we going to sell for? So it's just a question of taking that thing, dividing by the number of units you're going to sell, and that number becomes your price. Meaning what? Meaning we take our 550,000, okay, divide by 20,000, which are the units you're going to sell, and that will give us a number. It means you have to sell 275 per item, and then we get the money we want. We also get, so we get the revenue we want, which means we also get the desired outcome. And so if that is confused, just think of it this way. If somebody says, I'm giving you this money and I want 20% return, then there's just the question of what is 20% of that amount of money they've given you. Then that becomes the money that they want. So then you figure out what is the cost of doing this thing that you're doing. Okay? Fixed cost plus variable cost. Once you know the cost of producing whatever you're producing, then you add that number, the desired outcome. You know, they gave you 100,000 and they want 20%. So you get 20%, you add that onto the cost of producing whatever it is that you're producing. And then you take that number, divide it by the units that you're going to sell, and then that becomes your selling price. So in this case, when you sell that times the number of units you're going to sell, it means you'll have your total cost of producing that thing plus the desired outcome, the 20% that they wanted. And so you'll be able to give them back the 20%. You'll also be able to cover your costs of production. So that's the thing with the target or the rate of return, pricing. If you like getting summarized notes, summarized, downloads, practice exercises, videos, and all those things, make sure you join my newsletter. Okay, every week we do put out all those contents. For example, every Monday, the Money Monday, we talk about aspects relating to like increasing your income, business tips, and things of that nature. Every Wednesday, you get summarized notes and things of that nature. So link is provided. Make sure you sign up.